When payday arrives, most of us look at exactly one number on our pay stub, the final direct deposit amount that actually hits our bank account. Everything else, all those little rows of text and numbers stacked above it, tends to be a blur. You know money is being taken out, but it is hard to tell exactly who is taking it, or if the math is even correct. You can think of your pay stub as a financial dashboard. Once you learn the layout, you can use it to track exactly where your money is going. This waterfall chart shows how your income flows, and it all begins at the very top with your gross pay. This is your total earnings before anything is taken out. If you make $60,000 a year and get paid every 2 weeks, your gross pay sits up here at $2,307. Notice how that gross amount doesn't go straight to your bank. As the money flows downward, deductions pull from the stream, leaving a much smaller pool at the bottom, your net pay. That empty gap in the middle represents $500 to $700 per paycheck. Tracking that money line by line lets you verify your benefits, capture every employer match, and ensure you aren't overpaying the IRS. We can group these deductions into clear zones. Let's start with the blue zone, the mandatory deductions required for taxes and government programs. The largest piece taken out is your federal income tax. Your employer calculates this based on two things: your gross pay and the W-4 form you filled out on your very first day of work. That W-4 form tells your employer exactly how much to hold back. If you set it to withhold too little, you will owe the IRS a lump sum in April. If you withhold too much, you get a refund, which means you gave the government a zero-interest loan with your own money all year. This diagram shows another required tax deduction called FICA, which is broken down into two specific blocks. First, 6.2% of your pay goes to Social Security, which funds retirement and disability benefits. Below that, another 1.45% goes to Medicare, which funds senior health care. FICA comes with a specific benefit. Your employer is legally required to match your contribution exactly. For every dollar you pay into Social Security and Medicare, your employer pays another dollar on your behalf. It never hits your bank account, but it is a real part of your total compensation. Depending on where you live, you might also see state and local income taxes in this blue zone. 9 states have no income tax at all, while places like California or New York City take an additional slice. These taxes shrink your immediate take-home pay, but they are the necessary contributions that keep public services running and build up your future safety nets. Next is the green zone. These are voluntary deductions that benefit your future. This includes putting money into a 401k retirement account, a health savings account, or paying for your health insurance premiums. This visualization shows why these are called pre-tax deductions. If you contribute enough to health and retirement to shrink your $60,000 gross pay down to $52,800, the government only applies the tax bracket to that smaller number. The money is removed before taxes are calculated. This is different from post-tax deductions, like a Roth 401k. With a Roth, the money comes out after taxes are already calculated, so it does not lower your current tax bill, even though the growth is tax-free later. To keep track of all this, we look to the gold zone, the year-to-date or YTD column. You will find this sitting right next to every single deduction line. The YTD column is a running scoreboard. It adds up your cumulative earnings, taxes, and savings from January 1st right up to your current paycheck. Watching this column helps you track important limits. For example, in 2024, Social Security taxes are only applied to your first $168,000 of income. Watching your YTD gross helps you know exactly when that tax should legally drop off your stub. Increasing your pre-tax green zone contributions is a direct way to lower your taxable income and keep more of the money you earn. This color-coded sample stub shows how these pieces fit together. Your taxes sit in the blue zone, your voluntary savings are in green, and the gold columns track your cumulative totals for the year. Now that you can read the map, we can look for specific action items in the red zone. These are things you should check on your real pay stub today. First, find your 401k line. Check the percentage you are contributing and verify that it is high enough to capture the full match your employer offers. Otherwise, you are leaving free money on the table. Second, locate your health, dental, and vision insurance premiums. Ensure they are listed up in the pre-tax section, so they are properly lowering your tax burden. Finally, look at your federal withholding. If you have gotten married, had a child, or bought a home recently, Submitting a new W-4 to Human Resources ensures your taxes match your current life. The gap between your gross earnings and your net deposit accounts accounts for your taxes, your insurance, and your retirement. You now have the tools to look at those numbers and know exactly where your money is going.